Good afternoon. Welcome to this afternoon's webinar. This is the webinar for the Disadvantaged Business Enterprise Business um, series. This one is estimating. It's Victoria Beal with the LTAP Center. I want to welcome you and give you a quick housekeeping overview, and then I'm going to turn things over to Micah Flanagan. First off, I want to ask everyone who is on the webinar if you would please look in your GoToWebinar panel and find the questions box and drop me a hi or hello in there. I want to make sure you found this box because this is where you'll be asking questions of our presenters throughout the webinar series. We'll also, towards the end of the webinar, unmute those who would like to ask audio questions. But while we're going through the first part in the presentations, this is how you can send questions in, and I'll be happy to read those off to the presenters. Looks like quite a few of you have found that box. I'm glad to see that. The next thing I want to mention is that we have a handout section in the GoToWebinar panel, and you'll find 4 items in there. There's an estimating exercise. There's also a pricing for profit and estimating part 2. So those are all documents related to today's webinar. The 4th item is the Ohio LTAP Center's e-learning catalog. We wanted to make you aware that after the webinar concludes, we will have available to you over 200 different online courses that are available at no charge that you can take through our e-learning system. Many of these courses have been created by the AASHTO organization, which is a group that partners all of the state DOTs together, and they have pulled their resources to create many of the training courses in there. So I encourage you to tap into that. That's an incredible resource you have available at no cost to help guide your business activities. So with that, I'm going to turn things over to Micah. It's all yours, Micah.
Welcome, everybody. I just wanted to welcome everybody today to our presentation on estimating workshop. And I'm here to introduce Eric Anderson and Jared Turner. So if you'd like to welcome all of them today, I hope you guys have a great workshop here on estimating.
Thank you very much, guys. I appreciate the introduction. I'm Jared Turner with TBT Construction. We're based out of Cleveland, Ohio. We do design, build, maintenance, modifications, mostly in the commercial industrial world for pre-engineered metal buildings and commercial industrial projects. I'm going to be co-presenting with Eric Anderson today. He's an expert in estimating, and I can kind of turn that over to him.
Thank you, Jared. Again, my name is Eric Anderson. I am the owner of MPG Management, LLC. I've been in business for 21 years. Jared's actually a client of mine. I function in the role as a financial advisor for small business owners like Jared, operating not only as a fractional or remote CFO, but a financial advisor, and I've spent a ton of time creating estimating documents and just becoming efficient in the construction industry and so forth. With that, we'd like to open the presentation and by sharing a video that I think you guys will all enjoy regarding the methodology of estimating. Awesome. So with that being shown, show my screen. We're here. Oh, skip one, go back. The purpose of this workshop is to establish the concepts and guidelines for pricing your products and/or services. What we'll talk about today, the topics are estimating methodology. That's real critical because if I were to take, there's 36 business owners in attendance right now. I would probably guarantee that all 36 of us price or estimate our products or services differently. And so what I want to do is share with you how I do it and how I share it with my customers. And I come more from a financial standpoint to ensure that you, the small business owners, are capturing in buckets each dollar in terms of cost, capturing overhead to run your company, and then ensuring that each and every job is profitable if possible. So we'll talk about identifying direct costs, calculating overhead, the proper way to calculate overhead, how it ties back to your financial plan or operating budget. Direct and indirect, or direct and overhead equals your break-even number. So no job should be accepted less than break even unless you absolutely want to take that job. The proper way to calculate profit, I'll share that with you. There's thousands and thousands of business owners that I've encountered that don't understand how to calculate profit. It's not a multiplier. Then I'll turn it over to Jared and he'll go through blueprint, construction documents, change orders, which are critical, making sure that you cover your butt when you do change orders, making sure that it's written and not just a verbal. And then at that point, we'll go through some estimating exercises because I think it's critical not just to share our methodology, our thought process on how to estimate, but to ensure that you have a clear understanding when you leave this room, leave this workshop, that you, if it's something that you buy into and you want to implement, you clearly understand it. And I'll make that easy because for those that are MBE and DBE certified, I actually have an estimating app that I will gift to you. And so I probably shouldn't say this, but you could go to sleep now and then you'll get the app and the app will do it all for you. But again, you can't go to sleep because you have to understand the concepts of the app. So that's the gift for attending the class. And I think you'll be pretty excited about it. And then we'll have open discussion for those who wish to ask questions. We'll unmute you and answer any questions to the best of our ability. All right, so with all that being said, again, pricing for profits. The price of any product, job, or service must include the following three components. And this is my methodology. Direct costs. What is direct cost for construction or any industry? It's time and material. It's time and material. Labor, burden, taxes, fringe, material costs, supplies, direct costs, and a proportionate and appropriate amount of overhead. Overhead, what is overhead? Overhead is what it cost us to run our company 24/7, 365. On our P&L, it says general administrative expenses. That's overhead. We need to make sure that we capture that. And then a reasonable amount of profit. Profit is not, our salary is not profit. We have to make that clear. Our salary belongs to our company. Our company, it's the blood. It sustains our company. It creates value for our company. If we ever want to sell our company, if we want to borrow against our company, loans, banks, financial institutions, financial investors want to know, are you profitable? So as we estimate our jobs, we need to make sure that we ensure that there is profitability where available. So again, my methodology: direct costs, time and material, overhead equals break even, plus profit equals your estimating price. So step one, calculating direct costs. Direct costs are the expenses that can be directly applied to each job. Try to think of it as the cost which increases or decreases according to the product or service we make or distribute, i.e. time and material. Labor, staff, all the folks who are out there on the front line. If you're a roofing contractor, on the roof, putting it together. If you're an electrician, all the techs you've got out in the marketplace. But think of it this way: if you have no sales, then you have no cost of goods sold. Again, no revenue, no cost. They run hand in hand. Adding overhead. Overhead, and let me take a step back in terms of direct costs. I've been doing this for 21 years, and I don't think I've probably met 2, 3, 4, 5,000 small business owners. I don't think I've ever met a small business owner who had problems calculating their T&M, time and material. Never, ever, 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 ever. But of the thousands and thousands and thousands of small business owners I've met, I've only met 2 that really understood how to apply overhead to their estimates the correct way. And I will say Eric's way. Again, overhead is what sustains our business. It pays the mortgage or the rent. It pays the insurance. It pays the utilities. It pays for the fleet of vehicles we have. It pays for administrative assistance. If we are an owner who is not out in the front line, it pays our salary, which we're not a nonprofit. So we're in business to make money. We're in business to get a paycheck, each and every week or biweekly or, monthly, however you pay yourself. That's overhead, and it has to be calculated the correct way for you to estimate your jobs properly. And what the way that it's done is through your financial plan and operating budget, or your P&L, profit and loss statement from prior year, that allows you to do that. Before we can establish the overhead factor, though, we must first understand the 4 components of an income statement. Income statement, P&L, one and the other, just different verbiage. What are those 4 components of a P&L? I hope we all know what they are. They are revenue, direct costs, cost of goods sold, non-direct costs, which is G&A, general administrative expenses, operating expenses, overhead expenses. They go by a number of different names, and then profit and loss. So once we understand that the estimate ties to our financial planning, failing to plan, planning to fail, financial plan, that is critical. Now, we're not in a financial planning class, we're in an estimating class, but the estimate ties to how we plan our finances each and every year. So we have to plan that number, and how we do that is if we took our P&L, our profit and loss statement, and we look at our non-direct costs or our expenses or our G&A, general administrative expenses, and we divide that number by our direct costs, that creates the absorption ratio or the overhead factor. And that's critical. Again, it goes back to that step 2 of the estimating process. Step 1 is to calculate our time and material. That's 1, our direct costs. Step 2 is to apply that as a ratio. So with that being said, if your income statement said your direct costs were $100,000 and your general administrative costs were $34,000, your absorption ratio will be 34%. We would divide the 100,000, your G&A expenses, your direct costs, into your overhead, which would create an overhead factor of 34%. So therefore, if we had a $1 widget, the cost of the widget, the time and material of the widget was $1. We would multiply that dollar by 34%. And so therefore our break even for that widget, I didn't say our sale price, our break even for that widget would be $1.34. So we could not sell that widget for less than $1.34. Okay. Adding profit. Profit is the tricky one. It's always great when I'm teaching a class and I ask the question, if we had a break-even point of $1,000 and we wanted to make 20% profit, what would our sale price be? And again, I mentioned to you that of all the thousands and thousands of small business owners I've encountered, only two, and this is about 5 years ago, answered correctly. The incorrect answer is $1,200. 1,000 times 20% is 1,200. That's the incorrect answer. But that's the most commonly used answer for all small business owners. I will show you the correct way. As I mentioned earlier, it's not a multiplier, it's a divider. So how do we calculate profit? Adding profit margin. If you desire 15% profit, I said 20, you divide the break-even cost price by the inverse of 15. So we would take the dollar or 1% minus 0.15, and that would equal 0.85. So therefore, in this scenario, we had a break even of $2,948. We divided by 0.85. And our contract price or our bid price or our estimated price will be $3,468. If we multiplied that, we would come up about $77 short of that. Now think about that. If this was your business and you put out a couple hundred of these jobs, you'd short yourself by about $15,000 by just, multiplying incorrectly when it's really a division. So that's the critical piece of estimating. Really, when we talk about calculating our profit or adding our profit to the equation, that's something that we must remember. And that's probably the most important of the three. Profit is a divider, it's not a multiplier. So please keep that in mind. So again, in this scenario, our contract price would be $3,468, and we would, and that would ensure us of a profit margin of 15%. To double check that, what we would do is we would take the actual profit and divide it by the contract price, and that would equal 15%. If we took the example I gave you earlier, where we took the $1,000 cost and we multiplied it by 20%, and we came up with a $1,200 estimate, that would be $200 divided into 1,200, and that's not 20%. I think that's about 16.6% without a calculator in my hand. And it would show up on your P&L as a 16% profit margin and not a 20% profit margin. So those things are real critical when you do that. What I want to do now is just share with you an example of different companies, how they look at their financials when they create an overhead factor. And so I've got 4 companies up here, A, B, C, and D, all varying sizes. And I'm sure this is probably representative of the audience we have of the 35 businesses attending this workshop. So we've got across from top to bottom in column A P&L, revenue, cost of goods, time and material, gross profit, general administrative expenses, and net earnings. So company A generates $200,000 in revenue. Their time and material was 62.5%, which is a variable, coming in at $125,000. That leaves their gross profit at $75,000 or 37.5%. Their G&A expenses are $70,000. So the net earnings is $5,000 or 2.5%. That would put their overhead factor at 56%. So anytime they sold a $1 widget, they need to add 56 cents to that widget. And that will become their break even. Then they would add profit to that product, that widget as well. Company B in the illustration here is a $600,000 company. Their cost of material is 70 cents on the dollar, 70.8%, or $425,000. Gross profit of $175,000. Their expenses, G&A expenses, $150,000, which could include $100,000 salary for the owner. The net earnings of $25,000 or 4.2%. Wow, their overhead factor is almost 20% lower than company A. So that same $1 widget, they could sell for $1.35. Economies of scale, bigger company, smaller number. The illustration here is that for those that think there is a universal overhead number, there's not. You know, a lot of times when you see things where it says, oh, apply 20% overhead to your time and material, those are generic numbers. And your overhead is like your fingerprint. We all have different DNA. We all have different fingerprints. And so consequently, we all have different company financial dynamics. And that's critical to understand. Let's jump over to company D, because there's probably a lot of us who fall in this category. We're a $100,000 company. We've got $70,000 in time and material. We are the worker. We are the worker. I'm doing all the work. So guess what? That $70,000, the majority of it, if not all of it, is my salary. You know, I'm a plumber, I'm an electrician, I'm a one-person pop shop, which leaves me $30,000 in profit or gross profit. I spend $15,000 on general administrative expenses, and it could be a combination of a number of things from vehicle to tools, you know, et cetera, et cetera. Maybe I do a little advertising, marketing, et cetera. I make $15,000 in profit. Well, guess what? My overhead factor is 21.4%. That's actually the lowest of all four examples. And that's kind of the world a lot of us live in. But we still need to mark that $1 widget up 21% to realize, to cover our general administrative expenses. Let me give you, you know, one final thing when we talk about financial planning. Break even, direct plus indirect, going back to the methodology of estimating, calculating our time and material, adding an appropriate amount of overhead, that equals our break-even point. Break-even point. Profit does not begin until 100% of our expenses, both direct and indirect, are paid. So consequently, if we're bidding below break-even, we're not profitable. If we're also bidding below break-even, what's going to happen? We're probably going to experience cash flow issues. I wish I could just talk to each one of you and you could tell me if you've ever experienced cash flow issues. And if you have, it's probably the byproduct of underestimating a number of bids, because you're covering your T&M, but you're not covering your overhead expenses. And consequently, you're probably not getting paid or making the required dollars, salary, payroll to pay yourself. So it's real critical that, again, understanding the methodology, understanding that when I go out in the field, I need to calculate T&M, which you guys probably all do a great and wonderful job doing that. But I also need to have a financial plan and operating budget. I need to understand when the year begins, and we're already in May. If you don't have a financial plan, get one. I need to understand, what are my liabilities from an expense standpoint? What are my liabilities from an expense standpoint? And I need to cover those in my estimates. I need to cover those in my estimates, okay? And don't let anyone tell you that there is a universal number for overhead. There is not a universal number for overhead. All of us have different overhead numbers. And so we have to be very cognizant of that fact, and we need to make sure that we cover our overhead in every estimate. Profit's a different equation because you can bid literally all your jobs with no profit. Because guess what? Your overhead keeps your business running 24/7, 365. Profit becomes the sustainability of your business. It becomes the value of your business. When you're doing a business valuation, again, what I want to see is how profitable are we? But profitability comes from great estimates. Overhead comes from great estimates. Time and material comes from you being really good at your job and running your company. Okay. With that being said, that concludes the first portion of the estimating for construction part. And at this point, I'd like to turn it over to my partner, Jared Turner, who will walk you through blueprints, construction documents, and change orders.
Sounds good. Thank you, Eric.
With that, Victoria, if you would run our first 2 polls, that would be great.
Sure will. I'll put the first poll question up now.
Thank you.
Okay, so I'm going to kind of dive into a little bit about blueprints and construction documents, some of the key ones that we want to focus on that have kind of helped me out a lot in my past few years here as TBT construction goes.
Okay. Well, the poll is running. You're welcome to keep talking, but the only thing our participants are going to see for the moment is that poll question that's up. And if you're having an issue with getting your response to take on the screen, just exit out of full screen mode, hit the escape button to do that, and then it'll go ahead and accept your answer. But I would like us to get up to about 70% at least of you that have voted, and we are almost there right now. We just need a few more people to put a vote in, please. And we've pushed over the top. So I'm going to go ahead and close this question down, and then I'm going to share the responses with you.
Awesome.
All right. We have the question of what industry are you functioning in? And we have 52% of those who responded said they are in construction, and 48% say they are in consulting / other.
Okay, awesome.
So, all right, I'm going to go ahead and run our second poll question. Let me hide those answers. And our second question is your expertise in estimating. And you've got a number of answers that you can pick from there. So you guys are good at this voting thing. It moves moving pretty quick. So thank you. They want the good stuff. They want your content. So, all right, we are almost up to 80% actually already. So I'm going to go ahead and close this question out and share their responses. Those who voted, we have 4% said they are exceptional. 28% said good. 40% said average, and 28% said need lots of help.
Awesome.
So I'll hide that. And now we're back to Jared's screen. Thanks.
I think we have everybody at the right place here then. So I'm going to get into, again, a little bit about blueprints and construction documents, some of the forms that I use on a pretty regular basis.
If it's not advancing for you, go to the bottom left-hand corner. Oh, there you go.
There we go.
It went.
Okay, so first off, any project that you guys are working on, I know a bunch of you guys are in the construction field. Your first step is to kind of take a look at the plans, see what the project's all about, make sure that that's part of the scope that you guys that applies to your company and you're really interested in looking at it. Going through the specifications and some other forms. All these are, a lot of the standard documents are all from the American Institute of Architects. They kind of wrote the standardized documents for everything from payment applications, schedule values. They have some standard change order forms. but all the architects that come out with these plans kind of follow their general rules and guidelines to get us all the information on these projects. This particular project is one that we did a few years ago. I just kind of threw it in here because it's a local wastewater treatment plant for me, working with some high profile general contractors and working on projects like this for some of the bigger names, bigger corporations and whatnot, as well as for local turnpike commission or wastewater treatment plant, local government entities. It sort of kind of forged us into using more of these documents and kind of getting us more standardized procedures. And it's really been a little bit of a learning experience working with the general contractors and getting everything documented correctly and getting into like the schedule values and payment applications that we'll get into a little bit later. Some of these projects you want to make sure you add a line item in your estimate actually for the time that it's going to take you to deal with the documentation and as the overhead expense as a probably a non-direct cost to the project.
Jared, is there any chance you could get a little bit closer to your microphone?
Yeah, I'm wearing a headset, so.
Oh, okay.
Try that. Is that any better?
Thanks. It is. Thank you.
All right, so this essential cover page for one of our projects. You kind of go over the standard title block, gives you the name of the project, location of the project. You have your revision block that's typically up here. I'm not sure if you guys see where my mouse pointer is, but on the top right-hand side, the revision block, you want to make sure you're using the for construction set if you're actually out on site compared to when you're maybe bidding. Some projects might still be in the full approval process with whatever local municipality that has to approve of it. Your scale is going to be on every drawing. That's going to kind of vary from drawing to drawing and even throughout the same set of drawings. Obviously, as you're looking at things, the dimensions will change a little bit. Key notes, general notes, and a drawing legend that's typically in the middle of the page, or sometimes it's not always on the first cover page. Sometimes the second and third page of the drawings will be your legend or your basically your outline of everything that you're going to be looking for. For me, again, one of the things that I want to focus on is I focus more on Division 13, that's pre-engineered metal building and associated structures. A lot of times you'll have information that's kind of hidden in like the mechanical set of drawings. You just want to kind of glance over some of the other portions that are not always directly related to your scope of work to make sure that there's nothing going on in those other areas that would affect your scope that maybe the architect doesn't have the structural drawings updated for mechanical units that are going in or some of those small details. So from here, I think we can get into poll question number 5. I wanted to ask about, how many of you guys are using some of these AIA standardized, forms and whatnot. Victoria, if you want to go ahead and put that question up.
I've got it up now. As a quick reminder, if you went back to full screen, you'll need to escape out in order to answer the question. But folks seem to have figured this out really quickly and they're voting very quickly. I think just another vote or two and we'll be up over 70%. So help us out, vote, and then we'll share the results. We're not recording the way you voted, so don't worry about that. Okay, I'm going to close things out and share the results. You have 19% that said yes, 52% said no, and 29% said sometimes. So
That's
I'll hide
more than
those
fair.
results. Yep.
I think I kind of fall into the sometimes to usually category myself. As we get into the CSIs, this is your basic construction specification institute CSI, the master format. Once you get into a drawing, this is what all of your plans and specifications are basically written off of this master format. My category is typically Division 13 related to pre-engineered metal buildings, or Division 5 in miscellaneous metals, stairways, and things like that. But like I say, you want to always double check the other divisions that are kind of interrelated to your scope. So I've got to check in on the concrete and masonry a little bit, just make sure there's nothing funky going on, and double check in the miscellaneous equipment, Division 11, and HVAC, make sure that there's not anything crazy going on that's going to affect the loading on our pre-engineered metal buildings. Again, these are kind of standardized per the American Institute of Architects, AIA. So along with these standardized documents that we use, a lot of times I start with the schedule of values coming directly off of our estimate. So you have just about anybody that does any estimating, whether they use Excel or another format, you have line items of everything that you want to line up that's going to add up to be your total cost for the project. That schedule of values is a G703. Get into that a little bit more in detail later. That's all kind of interrelated directly to the 702 payment application, and that's what goes in for us on a monthly basis, or we're using the application for payment from the AIA on most of our projects, especially when you get into like a shared schedule of values where you have to give them a breakout of all your costs. For me, I've got, say, a foundation price in a line item, structural steel is a line item, siding is the next one, get into roofing, trims, any sort of wall accessories, overhead door openings, things of that nature. And then, of course, the change order forms that AIA has, or for us, a lot of times that's just almost like another proposal form, whatever standardized form you use for that, or if you use a Word or Excel file that goes in as a proposal. A lot of times for me personally, our change order form is just another proposal that goes in, so we make sure we get everything signed off on and all that. So again, getting into the G702 payment application here, it's relatively simple. Everything kind of lines up from the AIA here. You have your original contract sum, change orders. I don't want to get going back and forth, but I always start with a schedule of values here on the next page. I'm not sure if you guys can see where my mouse pointer is or not, but a lot of times you have each line item going down your proposal will be under description of work, a schedule value for that. Have your dollar amount in column E for whatever that line item is, and everything summarizes towards the bottom. A lot of times underneath that, baseline contract work that'll have its own broken out scheduled value. You'll have any of your change orders, add-ons, or deductions, depending on what you have happening for change orders. I usually just list that out and keep space at the bottom half of that page for those change order items. Essentially, everything from that will come back to this payment application. Like I say, for us, this usually goes in on a monthly basis for a project, especially if it's say a 6-month-long project. And we just kind of keep going from there. We can also get into retainage on a lot of these government or any sort of an ODOT facility type project. You're typically going to have a 5 or a 10% retainage based on what the contract states. That's all going to be on the right-hand side, and that kind of can automatically summarize that as you have this set up in sort of an Excel spreadsheet format. This is the standardized change order document from the AIA. The biggest takeaway from this one is that you want to make sure you have everything, signed and in writing. If you don't have it a signature on it. You could potentially do a verbal change order, but you want to make sure you have an email that goes across that's a memorandum of understanding of sorts to make sure that everybody approves of everything. Otherwise, you're going to be at risk for potentially not getting paid for that change order, or you'll be liable for what's going on there if it's not in writing and fully approved. So for change orders, you're always going to have things that come up that are add-ons to the contract, extra work that's required, or sometimes we also have occasions where some of the scope is taken away from us, or it's not required to work the way that we thought it would, so there'd be a deduct. You always want to start with a contract and make sure that covering that change order, or see how change orders are supposed to be handled in the contract. That should be in there, as well as the actual scope of what you're going over. If something's changing there, you want to make sure that that's in the contract, or find out if there's already something in there that's already predetermined on how to handle that. Always review the plans and specifications, make sure you're doing the right thing, and make sure everybody's on the right page. You want to make sure that you're on the construction set of drawings compared to a plans or a proposal set of drawings. You don't want to ignore or delay change orders for any reason. You want to kind of get out ahead of them and make sure that you're opening the lines of communication with everybody. So communicate with all the parties involved. Typically for us, that's between us, the general contractor, and or the owner directly. You always want to make sure you get everything in writing. Make sure you have the appropriate signatures on hand from yourself or from a project manager or somebody that has the authority to make adjustments to the overall project price. I've had situations in the past where you could turn in a change order, it's sent into a construction foreman or somebody, and they really don't have the authority to change project price or anything like that. So that can be an issue as well. So make sure that you're communicating with all the appropriate parties. And then of course, especially now in this day and age with cell phones, everybody's got a cell phone and cameras on them essentially at all times. It's always great to have photo evidence of what's going on and help everybody understand what's going on and why the changes are coming about. I think that's all I have, Eric. If you want to go ahead and we can start looking at some of these estimating exercises.
Okay, well, Victoria, let's do the fourth poll question. Which is most important to you?
Okay, hopefully I've launched the right one. What's more important to you, learning how to estimate correctly, receiving an estimating tool that does the estimate for me, or both of the answers above? I'm hoping this will be an easy vote for most people. Yeah, we are almost up to 70% already. So as soon as we hit that magic percent up, there we go. I will close it out and share the response. We've got 23% that said learning how to estimate correctly, and 77% said both of the answers, both of the above answers.
Okay, great. So everyone is super excited about something that I said we would share and gift, but you haven't seen it. So what we're going to do now, am I live, Victoria?
You are live, and I just gave you back presenter status.
Okay.
So there you go.
So what we're going to do now is we're going to take the next hour or so, and we're going to go through some estimating exercises that will give you guys a pretty good understanding of where we're coming from in terms of our methodology and estimating. Again, the three buckets: calculating direct cost, time and material, understanding how to apply overhead, your overhead, not a generic overhead number, and then the calculation of profit. So what we've got here and what we'll do in this exercise is I'll give you guys about 10 minutes of silence to go through the exercise and calculate what your estimate would be based on the numbers I'm going to give you. It's actually in the estimating exercise. So we're going to go to the estimate number 1, and then we'll come back. And for those that want to ask a question, wave your hand. Victoria will acknowledge you and unmute you, and you can ask myself or Jared a question, and we'll do our very best to answer those questions. Now, so we'll go through about a 5-minute Q&A, question and answer session, after giving you guys 10 minutes to try to figure out what the estimate price is. Now, here's the cool thing. If anyone gets the estimate right, I will give you a 12-month financial plan and operating budget that has a value of $5,000. Very, very detailed for free. So that's the cool thing about it. If you get the right answer, now I'm gonna be honest, in the almost 15 years of teaching these classes, I've never had anyone get the right answer, but it's out there. It's a carrot to shoot after. So the first estimate, we're going to go off of company A. As I mentioned in the on the first tab, the first page, there's 4 examples of different companies. Company A, which is 200,000 in revenue, company B, C, and D. Well, in the estimate 1, we're going to use company A's financials. So they're a $200,000 company with $125,000 in cost of goods or time and material, $75,000 in gross profit, $70,000 in operating expenses, and they have an overhead factor of 56%. So the job that we're going to do, we've estimated that the supply and material cost is $5,000. We're going to have a staff of 4 out on the job at $25 an hour. The fringe, it's a union job, is $15 an hour. Okay. Let me move this out of the way. The total projected labor hours are 500. 500 hours divided by four staffers. The tax burden with workers' comp included, I calculated at $2,750. So just add that to it. Contingency, what can go wrong will go wrong. We're going to add 5% contingency to the job, and we want to make 10% profit. So it's $248 now. I will give you guys 10 minutes at $258. We're going to come back, and if you think you have the right answer, raise your hand, and Victoria will unmute you, and you can share that with me. Also, at that point, if you have a question, raise your hand, and we will do our very, very best to address those questions. Ready?
So Eric, is it okay
Yes.
with you if we have them practice raising their hand real quick?
Yes, go ahead.
So everybody find where you can raise your hand on your GoToWebinar panel and raise it, please. I am seeing quite a few raised hands. All right, good job, guys. Okay, so give them the full
So
10 minutes. It have to be
come back
2:59 now.
at 3 o'clock.
Okay, all right.
3 o'clock.
So we're going to mute and we'll hang out. If you need something, though, please raise your hand.
Victoria, any questions? No one raising their hand?
I haven't seen any, but that doesn't mean that. Let me scroll up and down here. Actually, we do have a couple of raised hands. I'm going to go
Okay.
ahead and unmute Deshaun Coleman first. And
Okay.
there we go. Go ahead and ask your question, Deshaun.
I just needed to see the top of the screen, the page. I couldn't get all the information
Okay.
related to the cost. Yep,
And
that's what I
I'm
need.
unmuting David Moody next.
Thank you.
David, you have to unmute yourself. Sure. I'm going to mute you back, Deshaun.
Okay, great.
David.
I just wanted to be clear on the hours. Was it 500 hours total for all 4 employees, or is it 500 hours for each employee? I just wanted to make sure I got that correct.
500 total. Total labor
Thank you.
hours projected, 500.
Okay. Thanks, David. And I'll do a better job, Eric, of keeping an eye out for raised hands. Looks like
No, it's
another one
fine. You're
just
doing
went
a
up
wonderful
here.
job.
Let me find the next raised hand. All right, I'm not gonna butcher your name. Oh, okay, they lowered their hand. I was getting ready to unmute, so. All right, I don't see anybody else right this minute. Oh, okay, hands back up. I'm gonna unmute you. All right, go ahead and unmute yourself.
Yeah,
There you go.
I just wanna, the first page where you give us example of the estimating, can I see it again, please?
Of the example,
Yeah,
the exercise,
yeah, the example, yes, the example page, can I see it?
it's up right now. 5,000 supply hours, supplies, dollars, 500 hours, $2,500, $2,700 and burden and taxes, 5% contingency, 10% desired profit. So
No, I
you're
don't
gonna
mean
turn,
the example you gave us, the example you gave us.
oh, here?
Yes,
Okay.
okay, thank you.
Got it? You're welcome.
Khalid, you'll need to, oh, there you go. Go ahead and ask your question.
Oh, I guess I missed the time. I thought it's 3 o'clock for the answer.
Okay.
I was
Are
gonna
you
give him
done?
that.
Are you done?
I think I am.
Think you are?
Yes.
Victoria,
For the job that,
can the entire group hear him?
Yes.
Okay, well, don't give it to us yet then. We'll come to you first.
that's fine.
Thank you.
I have a question for you, though.
Go ahead.
The 500 hours is the ones for the job that's gonna be done with the 4 workers and everything, right?
Correct. Correct.
Okay. That's all. Thank you.
You're welcome.
Thanks a lot.
Victoria, is everybody still working or are they still,
David Moody has raised his hand again. I went ahead and unmuted him.
Yep,
Okay.
I have my answer as well. I just wanted to make sure that I get an opportunity. I don't know, should we just put it in the chat when you tell us to, or how did you want to I guess get our numbers to make sure we're on the same page, or right or wrong?
Eric, how about that? How about if as people complete it, we just go ahead and have them drop it in the question box, their answer?
That sounds wonderful.
Okay.
Yeah, have everyone drop it in you said the question box?
Yep. Drop it in the question
And then
box.
that way I'll walk through the exercise step by step and the calculation of the correct price. and we'll see in advance if anybody had the right answer.
Sounds good. We've got one in there already, so
Okay. Can they hear you?
I would hope so.
I was going to ask you to share it with me, but I guess you
Oh,
can't.
I can't, sorry.
You know, I'm curious.
You'll just have to wait like everybody else.
I know we have 3 more minutes.
I'm looking for
I'm super excited.
more raised hands.
Jared, my client of 4 years. Do you have the right answer?
I don't know that I have it right yet. I'm dabbling with it. I'd be doing better if I had Excel open compared to trying to scribble it down, doing it by hand real quick.
Micah, did you try? She on mute?
Yeah, Micah's
I
muted.
did not try.
Come on, you need to try as well. It's a great exercise. And who knows, you might win the prize and you can gift it to someone else.
Now, Eric, you know those ethics laws. Don't be getting us in trouble.
Oh yeah, that is true.
We can't accept
That is
anything.
true. Two
Khalid,
minutes.
if Khalid has another question, I did leave you unmuted if you want to ask it. I didn't know if you had another question or not because your hand was still up.
How many answers do we have so far with 2 minutes left?
We have 5 answers.
5.
And not one of them's the same.
That's good. That means we have 5 right answers. And you would think it would be super easy. Total hours, taxes, supply and material, 10% profit.
Eric, if it was super easy, everybody would do their own personal taxes too.
It's very true.
1 minute left.
Oh,
We're still
we just
stuck at
had
5?
Nope, we had another one come in. And it's yet another answer.
Okay.
There's another one. So we're up to 7 now.
Okay, so are we closing it off, shutting it down? It's 3 o'clock.
We can. I can say that, that was the last one unless you want to do one more call.
Nope.
Okay.
Let's go ahead and shut it down.
That was the last one.
They can only hear you, right?
They can
Victoria?
hear you as well.
Okay. All right, guys,
Everybody.
we're going to close it off. So please submit your final answers, regardless if they're right or wrong. And we'll take a few questions before I go through the exercise. So anyone with a question, please raise your hand and Victoria will acknowledge you or turn your unmute you.
Okay. Please, where do we submit the answer? I have my answer. Where do I submit it?
Okay. Victoria?
Do
Where do
you
I,
see the question box
where?
on the GoToWebinar panel?
I don't see it. Where is it?
Well, I'll tell you what, if you can't find it, why don't you just read it off to us? Because I've got everybody else's answers in there and I'll just write yours down.
Okay. I got a 1009125.
1009125.
Yes.
Are there any decimal points in there?
Huh?
No, that's good. $109,125.
Yep.
Got it.
Okay. We got it.
Any other questions?
I'm looking through. Doesn't look like it. So
Okay.
between this answer and the ones that came in the question box, we have 10 total.
Hold on, let me make sure. I think, hold on, no. Oh, excuse me. 109.5, please. I changed it. Do you hear me?
0.5?
Yeah, 100,912.5.
Okay, I got it. All right, we're
Got
good
it.
now.
Okay. All right, so I'll walk you through what my application looks like in Excel, and this is basically what you guys will be receiving as a gift to make your lives easy and simplify the estimating process as you go forward with your business and your business. So we talked about material costs. Well, let's go up further. So we start out with some inputs on contact information, client information, things like that. And then I talked about really how critical it is to understand and create an overhead ratio, which is the second component of estimating your job. The first component is calculating your time and material. The second is to calculate that ratio. So I pulled the numbers, revenue, cost, and expenses from the P&L that I created. So company one, they do 200,000 in revenue annually. Their time and material cost of goods sold is 125,000, and their annual G&A expenses are $70,000. So when I divide the 70 by 125, the overhead ratio for this company is 56%. So everything they sell, every product or service they sell, they have to mark up 56% to cover their operating expenses. Okay, so going to the job, entering in time and material. The time and material was priced out at $5,000. Okay, we determined that, and it was 4 staff per people. I can put each one at 125 hours at $25 an hour. It'll populate that. I'm going to do 0 billable since we did not apply that. So we have 500 total hours. And we said the tax burden was already calculated at $2,750. So that's really 20% of the job cost. Fringe was $15. The contingency was 5%. There's no salesperson who sold the job. For those that might have a salesperson, we could enter in their commissions and it would automatically calculate what their commissions are. And we said we wanted to make 10% profit. On a side note, you can also enter in the feet of the job if you want to calculate it in square footage. I'm going to put in 2,000 square feet just for the sake of doing it. I also have just share when a lot of times in construction, we'll get jobs and they'll be based on the square footage. A lot, and those square feet are not created by us. Again, they're generic numbers. And typically those who created that square foot number, they want us to fit into that box. And sometimes, we take those numbers and not really know what those numbers look like in terms of, okay, what's the T&M, what's the overhead, and what's the profit on a, let's say, $5.59 square foot job for 2,000 square feet. What does that look like? You know, you go back to when we were in the 3rd grade and dissecting the frog. Okay, well, if we get a square footage opportunity, we need to dissect the frog, dissect that $4.59 or $5.59, whatever it is, and break it down into total dollars. How many are going into time and material? How much is going to go into overhead, and how much is going to go into profit? Because we don't want to accept this job thinking that, okay, well, it's a $10,000 job, but it's not a profitable $10,000 job. So we have to be cognizant and aware of the fact that, you know, everything that looks good doesn't taste good. All right, so this is as simple as it gets. We entered in all of the parameters that we needed to calculate a price. I know you guys all came up with different numbers. So drum roll. So we click on the estimating sheet, and it shows our material costs at $5,000, 10.16% of the total bid price. We had 4 staffers at 125 hours each at $25 an hour. Each of those individuals, their gross pay will be $3,125 minus taxes. Please don't forget, we also have to add in federal, state taxes with every hour billed. So please don't forget to add your labor burden to the job. I had a client once who, he wasn't my client at the time, but he came to me afterwards to help fix the mess, where he had bid a job and failed to include burden, and it cost him over $100,000. Big job. So always include your burden. Fringe for those in the union. If it's $15 an hour, whatever it is, we need to include that. On this job, that calculates to out to be another $7,500. We don't want to forget that. Total direct costs, total time and material, $27,500. Again, the $5,000 in material, we've got $12,500 in labor, $2,500 in taxes, $7,500 going to the union and union dues. Total direct costs, $27,500. Our overhead ratio, what it costs us to run our company, is 56 cents on the dollar. So we have to add another $15,400 to this job. Now, if our overhead ratio was 20%, that'd be a much smaller number. But this is our job, our company. We don't really care what company B, C, D, E, F, G price that. We need to know that if we bid this job, this is our DNA. So we add 15,000 to the job. Contingency. What can go wrong will go wrong. We have to plan for what? Contingency. We have to plan for mistakes. We have to plan for delays. You can look at contingency as the retention held. However you want to look at it. I recommend contingency with all my clients. Sales commission was 0. So when we add all this together, our break even, our total direct costs plus our indirect costs, our overhead, is $44,275. We want to make 10% profit. Profit is not a multiplier, it's a divider. If we were to multiply that number, I'll pull up a calculator real quick. 44,275 times 1.1 equals 48,702. If we were to multiply, well, we didn't multiply, so the number comes up to 49,194 because we divided the 44,275 divided by 0.9. Again, our break even divided by 1 minus our desired, which is 10%, equals 0.9. So we're making $4,919.44 in profit. So if anyone had the project price of $49,194.44, you are the winner. And raise your hand if you had that number. So at 500 hours, the project is bid at $98.39 an hour. Now you might
Well,
say, well, I'm
there's a
sorry.
hand up. There's a hand up, and they were very close, but they didn't get that number.
They didn't get that number. What did they have?
50,505.
50,505. Very, 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 very close. All right. So if we took the total hours of the job, the 500 hours, and divided by the estimate price, it comes up to $98. And you say, well, $98 might be high. Well, let's go back and make an adjustment real quick. Let's look at the job without material costs. So I'll put a 0 there.
Can you
I'll
take a
go back.
question from an audience member?
Sure, go ahead.
We've got Steve Henderson. I unmuted you, Steve. You'll have to unmute on your end to ask your question. You had your hand up, Steve. That's why I unmuted you.
Who was the person who came up with 50,000?
50,505 was David Moody. And Steve must not have a question after all. He put his hand down. Okay.
Okay. So if we take out the material, the project price per hour drops to $80.50. If we take out and make it a non-union job, the hourly rate drops to $53.67. So when you think about the total dollars, you have to think about it in its totality. It is a union job at $15 an hour. It does have material in it, and that boosts the price. See, the price drops significantly by taking out those two items, primarily because it's a union job. By a show of hands, how many are in, I should have asked that question. How many are in the union, and how many are in the union or a union shop? Anyone?
All right, I'm scrolling. Apparently there's a few, but not that many.
Okay.
Well, I don't see anybody's hand raised now that they're a union shop.
Okay. So evidently we don't have any union shops in here, but at $53, if you are a roofing company, electrical company, I can go on and on and on. $53 is not an outrageous number. Or the $26,000 when you're looking at 500 hours. Very, very affordable. And the reason I echo that is because a lot of times we'll look at that 56% number and you'll think, wow, that's really, really high. Well, again, that's your DNA, that's your fingerprint. And if I'm sending 4 guys over for 500 hours to charge you $26,000 when my total direct cost is $15,000, that's not a bad number. That's not a bad number. If you expect me to do the job for $17,000, you've probably lost your mind. Okay.
Quickly, the fringe benefit or the fringe amount that you added, that goes almost directly to the hourly rate of $25 an hour, correct? So that's per guy per hour?
Correct. So yeah, so the hourly rate for each employee would be at $40 an hour because you're paying 25 and then the union is collecting 15.
So
So
Eric,
that's
in
why
the
it's
chat
itemized and billed
area,
separately.
for us, I put in everybody's name and answers that were sent in, so you could
Okay.
see that. But I think a lot of folks way underestimated the job. They would basically be paying for the privilege of doing this work if they got the award, which that's
Well, see,
not something you ever want to do.
that's why they're here.
I know a few of us had the opposite of that. We would have made a whole lot of money bidding it around $100,000 or so. I'm not sure if I had a missed keystroke or was looking at something incorrectly.
Okay. All right. So by a show of hands, was this exercise good?
I think it was good. I have a quick question. Can you hear me?
Yep.
So David Moody. My question was on the contingency. So it
Okay.
looks like when you do contingency, because that's the part that I got wrong. Otherwise, I would have got your number. So I'm a little bit upset. But I guess my question is, why with contingency do you not have an overhead cost component as well? Because it looks like the 5% contingency only applies to direct labor or direct cost. But if you do use the contingency, won't you have overhead costs as well?
You know what? It's just an individual preference, David. You know, it's just you could your answer is right on point. You can take the contingency and do it on total cost, which would be the 24,150 to break even. Or, you know, I prefer to do it on total direct costs. But
Okay.
I would not debate you and say, oh no, you're wrong.
Okay.
I think it's a matter of choice.
All right. Thank you. Appreciate it.
Oh, you're welcome. You're welcome. Great answer. I mean, so, you know, now you'll get the second one right.
Anne had her hand raised. Anne, I unmuted you if you want to ask a question verbally.
And
We can hear you typing, Anne. Did you want to ask a question?
No.
Okay, I'll move you back then. Thanks.
okay, so by a show of hands, was this exercise any good?
The hands are going up quickly.
Okay, you guys ready to do another one? And so we should have a winner of the financial plan and operating budget. I'm assuming David will get the second one 100% correct now that he totally understands it. And I really don't mind doing 34 if all you guys get the right answer. All right, so the second exercise is job 2. And you guys have this in the worksheets that are available to you guys. So the second 2, we're using company B, revenue of 600,000, cost of goods at 425,000, gross profit at 175 or 29%, operating expenses at 150, net earnings at 25,000. We have an overhead factor of 35.29%, break-even point. That's when we've generated enough revenue to pay for our expenses. We've generated enough revenue to pay for our expenses. Break even. The job itself. Again, we have supply and material costs of $5,000. We have 4 laborers. It is a that we do. Whoops, that's the same job. My bad. Let me change these around on the fly. So we're going to make this a non-union job. And we're going to change the hourly rate to $35. No fringe. Oh, there. Tax burden, we're going to make that 14.25%. That's a percentage. We're going to come up with 1,000 hours, a big job. We'll go for David, 10% contingency, and we'll go 20% profit. No, we'll go 8% profit. 14.25. Tax burden. Jared, should I add anything else? No.
No, I think we're good to go, man.
Okay. All right. So this is our second job. $5,000 supply and material, 4 staffers, $35 an hour, 1,000 hours. Tax burden 14.25%, contingency 10, desired profit 8. And we'll give you guys 10 minutes to 3:32. And once
Sounds
you
good.
get your answer, go ahead and submit them to Victoria.
And if they have questions, they can raise their hand and I'll unmute them.
Correct. And for those that were in the consulting other arena, this exercise is not just for construction. It's for all business industries. And if you're a marketing company, an advertising company, even a consulting firm, you would go through the same exercise in calculating a bid price as someone like Jared, who owns a very nice sized construction company. It's no different. Time and material, overhead, and profit.
Yeah, essentially your schedule of values, your line items are going to be a little bit different because you're potentially will have consulting hours as opposed to where I have field hours.
They'd like for you to please show the top part again, if you would. Scroll up.
There you go.
Thank you.
The key number is the overhead factor at 35.29%. Anybody have their hands up, Victoria?
They don't.
They're all working
Oh,
hard at their
now
desk.
they would like to know if you could scroll down for the profit percentage, please.
8%.
Yep. And one person would like to know the answer to the previous question because they want to double check their numbers.
Okay, I'll go back and change that. The answer was, I made some changes to this, so add the 5,000 back into the equation, and I have to add the, did I take anything else out? 20%, 5, 0, 10. Yeah, that's it. Nope, I did something. What did, oh, I took out the $15. Fringe, 15.
Fringe rate.
Yep. So the answer was 49,194. $49,194.
Thank you.
You're welcome.
We got our first answer in.
Okay,
Expect over the
awesome.
next few minutes we'll be getting lots. So Eric, while they're putting their answers in there, I was thinking about your way of awarding this to the person who gets it right. I think actually you should award it to the person who's farthest off, because they're probably the one that needs it the most. I understand that doesn't encourage people to try to get the right answer that way, but just saying.
Can they hear you?
Oh yeah, they can hear me.
Yeah,
They can
see,
hear
then
you too.
I would just throw some crazy number up.
I know. Well, we still want them to get it right, but truly the person that was the farthest off is the one that needs it the
That
most.
needs the most help. But
Yes,
here's the beauty though. Everyone receives the estimating app.
that's awesome.
So when we leave here, we just have to figure out between, myself and you and Jared and Micah, how do we, it's an Excel application. Do we email it directly? Is it something that Micah will do? Is it something that I will do? How do we get it to them? Should they contact me and I'll email it to them directly? That way there can be some personal, touch to it. I don't have a problem doing that as well. So as
Well, I
opposed to
know
just
you're,
sending out a blanket
yeah,
email.
I know you're limiting this to just the DBE firms that are participating.
Correct.
So we'll talk to Micah about it when we wrap up,
We'll talk
unless she
about,
wants to chime
afterwards.
in right now, but yeah.
Yeah, but there is
We'll figure
and
out
there's a,
what to do.
I'm sorry.
We'll figure something.
Okay. Yeah, but to answer your question, Victoria, everyone now, and that's the one thing I love about teaching. A lot of times I want to put the participants in a win-win situation. You know, I've got 21 years of doing this, and so I understand it intimately. You're sharing something, a thought process, a methodology, and you're giving them 1 hour to absorb it. So what I really want to do is make sure that they've got a takeaway and it's
Sure.
something that they can implement immediately. If for whatever reason we get this to them by Friday now they have a professional, exceptional document that they'll use for the rest of their life, business careers.
That's awesome. And someone did correct me. I mentioned only the DBE, but they had mentioned that they're a WBE, SBE, and EDGE, and those folks all receive it as well.
Correct. Yeah, anyone who's, that old MBE, DBE, Edge certification, it's all good.
Thanks.
It's all good.
So how much longer do we have left?
I think what, 2 minutes, 3 minutes, 30,
Okay.
33, 3 minutes. Just the one answer so far?
Just one so far. I'm sure we'll have a few more pop in there.
Is it from David Moody?
No. No, the first one this time was Tammy Burns.
Tammy Burns. See, I love to do 2 or 3 because if you just follow the breadcrumbs the first time, right, you should be able to get the second one right.
It's that old theory about practice makes perfect.
Absolutely.
And Micah, while we're waiting for those responses, there is a question in the question box that I thought you might be the best person to address. Deshaun would like to know, how do you get the certifications, the MBE, etc.?
Well, the MBE goes through the Ohio Department of Administrative Services, but if you not sure if she's DBE certified, but DBE certification goes through our office, so we can help with that. We can send out information. If you, if I can get her email, I can provide her with the link to get certified, all the certifications.
We will definitely give you her email. Anyone who's asked questions during our webinar today, I'll have a report for you of those questions that were asked, so it'll be on there. Oh, we just got one more answer. So 2 answers so far.
We'll go to 3:35. Give them 2 more minutes. They all still have their heads down working.
I think they just really, really want to win.
Well, everyone's a winner.
So they're focused hard on it. There's the third one.
What is that?
It was my phone just vibrating real quick here on the table.
I thought that was like some kind of buzzer, you know, stating somebody was doing something wrong. You know what I mean? That's what it sounded like.
It's like a hockey score.
One minute.
So I've typed the 3 answers we received so far into the message
Okay.
panel between the
All right.
presenters.
You guys have 5 seconds, 4 seconds to submit your answer. 3, 2, 1. Time's up.
All right, we got 2 more right at closing. So I'll put
Okay.
those in there as well.
All right, so let's ask the final poll question. Which is most important to you? A, learning how to write a change order. B, learning how to calculate overhead. C, understanding blueprints and construction documents. Or D, understanding the difference between direct and indirect costs.
They're answering that. You may have to give away 2 because 2 people got the same answer.
Okay, if they're right. Are they sitting next to each other?
I don't know. I doubt it. All right,
You
I'm going to
know,
go ahead and close the
let's
poll
post
question down now.
Yeah, poll question.
And I'm going to share
When
the
the
results.
class is live, it's a group exercise.
Oh,
So
there you go. So
we
the
are
most
in group.
important to them, 10% said learning how to write a change order. 29% said learning how to calculate overhead. 33% said understanding blueprint and construction documents. And 29% said understanding the difference between direct and indirect costs.
Okay,
So
pretty even.
I'll hide those results now.
Okay, cool. All right, so let's get started and calculate the answer. So we'll go back to the trusty estimating app, and we need to enter in the correct financials. So 600,000 there, 425 $175,000 there and 175,000 there. So is that right? That's not right. Oh, 150. No, what did I do wrong? 425, 150. 150,000. Okay, 3529. And we had material costs at 5,000. And we have 1,000 hours, correct? So that's 250 per person. And that's at $35 each. Guys, the cool thing about this is that if you've got different staff making a different amounts of money, let's say this was at 30, this is at 25, and this is at 20, you can put it in as well. The one other thing that you guys will get, and you can deactivate it, I typically will do non-billable hours, because a lot of times we're estimating and we want to make sure that we cover all bases. So I do calculate non-billable hours at 10% ratio. So what I typically do here is I'll take that and multiply it by 0.1. So in this scenario, it would give me an extra 100 hours. And what happens is that from a project management standpoint, if we're planning, if I'm giving my project manager, or I'm managing the project myself, I'm giving them 1,000 hours, knowing that I've got a cushion of 10%, 100 hours sitting in my office. And guess what? If they manage the project and complete the project in under 1,000 hours, I can do a couple of things with that, with those additional hours. A, it can fall to the bottom line, or B, I can give it out as in a bonus to the 4 individuals who work that job. So different ways that you can manage it. But in this exercise, I'm going to deactivate that, so that comes in at a 0. The labor burden was 14.25%. There was no fringe at 0. The contingency was at 5. The profit was at 8. And we'll keep the square footage at 2,000. Let's make it a big job, 4,000. All right, so we've got $5,000 in material costs, 9% of the total job. We've got, oops, I changed the hours. Can't do that. That's not right.
It should be at 1,000 man hours, I believe.
35. Right.
Yeah.
Yeah. So at $35 an hour, at 1,000 hours, we have 35,000 in labor costs, 14.25, which is pretty close to our typical labor burden. We would pay roughly about $5,000 in taxes, company tax, corporate taxes on our labor. Our total direct cost is $44,987. At 35% overhead ratio, that generates $15,877. So we had our 5% contingency, $22.49. That gives us a break even of $63,114.82. At 8% profit, that puts us at $5,400, almost $5,500 in profit. Our bid price, estimated price, would be $68,603.07. On a 1,000-hour job, we're billing that job at $68.60 an hour. 4,000 square feet, we would bid that job at $17.15 per square foot. The other cool thing about this application, which I have not shown you guys, it gives you a 50-point scale metrics. So it's 25 points up and down from your bid price. So we bid the price at 8% profit. It shows our bid price at $68,603. If you get into a negotiating standpoint, so it's a kind of an open bid, and the presenter said, hey, you're a little high. I always ask the question, what's your price? And if he or she says 65,000, I can look to the right. 65,067 gives me 3% profit. I can take that job. If they say 55,000, well, guess what? I'm losing 14 cents on a dollar. I'm not covering my overhead. Do I really want to take this job? Well, I'll answer the question for you. If you're having a phenomenal year and you've exceeded your financial plan, assuming you have a financial plan, the answer would probably be yes. But if you're not having a great year, right, and we're still at or below target of making our plan, the answer probably will be no, as your financial consultant. But it's another tool that gives you, again, power or intelligence. Knowledge is powerful. So it gives you a tool to look across the landscape and says, what is profitable for me, my company, and these estimates or bids or awards that I have. So the winning price is 68,603. Did anyone have the winning price?
We have a couple people with questions.
Okay.
Tammy is unmuted, so she just needs to unmute on her side and she can ask her question.
Okay, Tammy.
And David, you can unmute yourself and ask your question too.
Contingency 10%.
Did I say 10? Oh, you know
think
what?
you
Did I?
did. Yeah.
Oh, okay. Let me. I'm sorry. I'm moving fast. I know we're short on time. Let me change that. I did say 10%. Are you 100% right? 10%. So 71,048. Anybody got it right?
Oh, they are just
No.
like pennies off.
No, yeah, I had 71,046.02. So I don't know where whether it was a rounding or something.
Probably a rounding. So I will give you that because you know you were literally pennies off on both.
Yep.
So
Yeah, I want to find
we
my
have
error though.
we have a winner. It's probably just it's the rounding.
You have
It's
two
literally the
winners.
rounding.
Kendra Riggs also got that same number that David
Who
did.
also?
Kendra Riggs.
Kendra Riggs.
Yeah, you guys don't forget this is estimating. So being to the penny doesn't always necessarily count, especially if you're trying to negotiate for to win a project or not to win the, and to go along with what Eric was talking about, sometimes it's okay to take a project, a little bit at a little bit of a loss. You just try to usually want to at least be at break even and make sure it's not going to cost you money to do a project.
Okay, so we have two winners, Kendra Riggs and David Moody. Is that correct? Victoria?
That is correct.
Okay. All right, so what I will do is I'm going to, do you guys have my information? My email address, phone number?
I'll just put you all in a group email after this.
Okay, put us
That
in a
way,
group email and then we will coordinate. You guys are the grand prize winner of a 2000, if you want to go 2021, 2022, or you just want to go with your fiscal year, which, that cheats you out of 5 months, financial plan and operating budget. Everyone here who is DBE, MBE, ED certified will also get this estimating app. The four of us will figure out how we're going to get it to you within the next, we'll get it to you before Friday. So you'll have it by the end of the week. We just have to figure out how we're going to get it to you. For those that are not DBE, MBE, ED certified, I will post on my website how you can purchase this at 80% off. So it's basically the cost of a nice meal for you and your wife or spouse. Not your wife, your spouse, your significant other. Any other questions? Raise your hand.
I don't have any other questions. Oh, they want to know the website.
Can we post that also?
Sure.
I'll give it to you. And the discount is not up now. I need to, that's why I said Friday. I have to post it to where they can go and they'll get a code and they can get the 80% off.
Yeah, we'll send your website out with a copy of the documents from today in the follow-up email.
Okay. Kendra, are you excited about a financial plan and operating budget?
I don't think I've got her unmuted. I'm sorry. I need to unmute her. Oh, I can't because she called in on her phone. But I'll speak for her. I'd say she's very excited.
David, are you excited about a financial plan and operating budget?
Absolutely. I live for this stuff.
Okay, where are you out of?
Columbus, Ohio.
Columbus. Okay, cool. We will get that done and taken care of, and we'll expedite it and have you up and running within the next 2 weeks.
I would say it's pretty fast. Eric and I have been working for about 4 years together, and having that annual budget and helping out with the estimating, it's been really, it's been a game changer for us. We've been in business for 20 years, and it's kind of completely changed the way we look at our numbers and the way I estimate things.
Thank you, Jared. I met Jared. I was part of the 10,000 Small Business Program from its inception in 2008 or 9, 10. And I taught the financial module 8 in the program for almost 10 years. And he was a student in the class and approached me afterwards about getting together and having some lunch and talking business. And we've been rolling together ever since. So any last questions before we say goodbye?
Yes, they'd like to, can they see the top part of the problem? They'd like to see what they did wrong so they can figure out how to do this.
Okay. All right, so material
And Tammy,
costs.
I'm sorry. Let me just mention, Tammy, you're still unmuted on my end. So if you have any more questions, you can just unmute and ask them directly. Thanks, Eric.
Okay.
I was just close and I wanted to see what I did wrong. That was all. I just wanted to see the top part.
Is this Tammy?
Yes.
Okay, what was your number?
I had 71,000.
71 what?
048.
Oh, you had the same number as Kendra?
No, Tammy had
Oh, I'm sorry.
73.
I had 73. I'm sorry.
Yeah.
I wrote down the right answer so I could try to figure out what I did. I had 73,451.10.
73,451.
But I was a lot closer on this one than I was the other one, so I did learn something.
Well, and the beauty is that by Friday, you'll have this available to use going forward. And so, you know, the uncertainty now just goes right out the door. Because I think it's pretty exceptional tool for all small business owners to use. And, you know, it runs across all business industries, no matter what you're in, what industry you're in. Again, construction, advertising, marketing. It's a great tool to calculate a price for what you're selling. And you could have been off what David talked about earlier. You could have calculated your 10% contingency on the total break-even number as opposed to just on the direct cost. And that could be the couple $1,000s right there.
That's probably what it was. Thank you.
Yep.
So there's no more questions in the question box right now.
Okay. And you guys will handle the overall survey?
Yes, I was going to mention to everyone that as this webinar ends, please look for a new screen to open on your PC that will provide you a survey. And please take a few minutes to give us some feedback on today's training. We'd also like to know, and this is our final question on the survey, what other topics would you like to have training on in the future? So thank you, Eric and Jared, for your time and your expertise today.
Thank you
In
so
a
much.
virtual world, you guys did a great job with the delivery of this training. And it
Okay.
sounds like quite a few of the participants really benefited from it. So,
Well, I'm super excited and I'm no longer super nervous.
Yeah, thank you guys for having us today. I appreciate it.
well, thank you.
Thank you
And
so
if anyone
much.
has follow-up questions, please feel free to send those in and we'll make sure they get to the presenters. Everyone have a great rest of your evening. Take care.
Thank you.
Thanks.
Bye-bye.